you know, talking about dollar and how it does affects gold. So quickly, I'm just a daily time frame. You can clearly see here, there's a daily time frame. And you're probably thinking, why is it so zoomed out? Why am I seeing, hardly any candles, but just so zoomed out and just looks like, ants right now. But I just want to show you where gold was, where the highest of gold ever was. So on 20th September, around, let's say, between 28 September and October, gold was at 1792. That was the highest gold has ever been. And it was on 012. So it was 12. So it was about 8 years ago, exactly 8 years ago. So, you can clearly see. And since then, gold has risen all the way to highs of 2072. So nearly about, let's say, 300 points rise, even more than that. That just happened. Let's just see. Let's just zoom in now. So I'm just going to draw a line here. So for my reference, let me just zoom in quickly. All right, let me just zoom out. So yep, that's the line. Okay, so this is the line. So gold finally break the highs of past 8 years on 7th of July, and since 7th of July, just been rising and rising. And what happened on 7th of July was issues between, you might have heard, Trump and Biden. So between the presidential elections, plus jobless claims were really high. It was into some millions, the highest they ever seen. Plus hardly any vaccine information, and more lockdowns and crazy cases were rising at this around July time in US. So for that reason, we saw gold just going massively up, and went as high as 2074. There was some people, you might have heard of Goldman Sachs, and those people are predicting that gold might hit 23,000 by end of this year. So it could still happen. We're not saying no, but what's the current state of the gold? So that's just daily basis. I just want to show you how gold was, where it was, give you a bit of overview of what we can expect gold to happen. So just keep in mind, once the price reaches a level, it can reach there again. So gold could reach all the way high as at 2070 again. That's a given. In trading, it happens all the time. When a price reaches a high level, it does reach again, and it breaks that level. So it doesn't mean this high is going to stay for long. It could stay for another, let's say, maybe end of this year. Maybe gold might not rise 2064 anytime sooner, but it will break it. So just remember that gold will rise above 2065. And there will always be a reason for gold to really break above 2065. So just remember that, guys. Okay, so let's just get into it quickly then. So we're going to first talk about what happened today. So let me just go to a short hourly time frame. It'll be much easier for us to see. So on the time frame, if you remember, or if you watched the daily watch list in the morning that I sent out, I drew this trend line, and I talked about this, this box, and the importance of this box. I was talking about, like, if a gold really does break above and close above this box, which it didn't. It did go up, but it just dropped down as soon as the NFP news came out. I will be going into that in a bit, just in a bit. Let me just complete a bit overview. So gold didn't actually break above this level, this EMA level. It dropped as soon as it, just went above and got down straight away. It wasn't even up there for a second, guys. It would just show up nearly, let's see how many points it show up. Show up from here all the way to about 8 points, then it just dropped down all the way back to lows of 1925, which is about 15 points. So, as long, again, this trend line has been respected quite strongly. So keep an eye out this trend line, guys. I would recommend you guys to draw this trend on your own charts, or this an hourly time frame, because this trend has been respected really strongly. Even today, it wasn't able to break it, even though it was NFP. So very strong trend line, guys. As long as this trend line is valid, we're going to be looking for sales, and mostly sales in this coming days, because today is the last day of the trading. As you guys know, it's Friday. The only session that's open right now is a US session. So when Sunday night, when the market really opens, this trend line will give us a good overview of what we can expect when the market really opens. So first, we're going to look at, so for example, again, for us to really see gold to really rise, we need to see a breakout of this trend line. So first, what we need to see is a breakout of this trend line. So a break above for gold, above this trend line. So close first, we need to see a close above 1931. That's our first criteria for us to really get into a gold buy. Then second criteria is the gold to again close above 1942. And when it really does close above 1942, then we can hold gold, as a buy. Then we can really get into buy territory. As long as gold is respecting this trend line, as long as gold is below this resistance level of 1927, we'll be looking for sales only. We could see gold as you know, gold dropped as low as 1917, and last time gold was this low was on 20th of August. It has dropped as low as 1911, so that could happen, guys. By end of today's session, we could see gold going back to 1911. It's not guaranteed, but it could happen. But it's going to be really quick. It's probably just going to touch 1910 or 1911 and zip, go upwards straight away. So be careful if you are looking to trade gold as a sell today, because it can just whip so quickly down, up and down, up and down. So that's why I would recommend you to be trading as a retail trader. I wouldn't recommend you be trading Friday closing markets when markets are closing on Friday, because it can affect. There could be low whipsaws and low volatility before market closes, and we get caught. As a retail trader, we do not have enough capacity to hold those kind of whipsaws. So it's better for us to get away from the market when it's about to, when the market is about to close for the weekend. So that's the first criteria, guys. Let's go to short time frame and really understand what happened when the news came out. So this whipsaw happened exactly at 13:30. You can see. So if you can see here, you're gonna see here 13:30. This massive candle whipsaw happened. What was that? So let's quickly look at non-farm. So non-farm payroll, guys, came, better than worse than expected. They were expecting 1,400k jobs to be created in month of August, which was last month, but only 1,371k jobs were created. So about 20, let's say about 29k less jobs being created. That's a bad sign for US, of course, but the good sign they had was unemployment rate fell by about 1.2%, which is more important than this right now, because unemployment is the major issue in US right now. So if they see a good good news such as unemployment is falling and jobs creation is there, so is there, is not that bad. They are creating jobs on daily basis. Yesterday's if I just go yesterday's unemployment, not employment, sorry, what was it? Where is it gone? Yeah, initial jobless claims were better as well. So less people are claiming jobs. Jobs are creating, unemployment is falling down. All that factored in being, seeing gold dropped quite furiously. So when the news came out, of course, investors thought, okay, bad news, let's buy gold. But when they really looked at the whole news, when they compared the news from, yesterday's and today's news, they thought, no, it's a good for dollar. Dollar is getting strength right now. It's better to sell gold. And that's why we saw this massive whipsaw of nearly, let's see where it started from, like 1949 all the way back to 1925. That's about 24 pips. That's about 40 pips. 24 points, 40 pips movement just in less than, I think this happened in less than a second, guys. Less than a minute. So crazy. That's how gold really moves, guys. That's why it's so hard to predict gold. That's why I recommend you trading gold as soon as the news comes out. So this happened exactly at 1:30. So if you were in this trade, let's say if you were a sell trader, you're taking a position, let's say, you saw a breakout above this EMA, and you thought, okay, this is a buy trade. So you took your trade here, you put a buy, and you put your SL, just say you put your buy, you're expecting it to go all the way as high as, let's say let's say you're thinking of going to 1975 now because you're holding a long term, but your SL was just below this and you got whipsawed. If you were selling as well, there's no way you're going to hold your SL just about, if you went to here 1940, there's no way you're going to have SL 90 points, 90 pips. So you probably got whipsaw taken out easily. As a retail trader, nearly every trader out there would have been taken out by this massive whipsaw. Only traders that could survive this trade would have been, big bankers and hedge funds and those people with a massive cash pile on their hands. So they're only the one who could survive this kind of a movement. So that's why. But that gives an overall trend of gold for next coming days, guys. So I think on this good news from unemployment rate falling and initial jobless claim is going down, plus NFP is not as bad as they expected, we could see in coming days gold dropping as low as 1909 or even go to 1900. So gold could go as low as 1900, guys. That's the pivot point that we could see gold dropping back to before we can see some kind of momentum upwards. So and longer term basis, for a long term basis, let's say on a longer term, if I were to take a daily trade, if I were to trade for just take one trade for a day, I would sell gold for a long term basis. But if I was scalping, I would be looking at 15 minutes and I'll be just looking for a quick buy. So if, for example, price reaches this level, I could be looking for a buy when price reaches 1917. I could be looking for a buy when price reaches 1909. So these are the levels I would be looking for buys. I could be looking for sells again once price retests levels of 1930. So these are the levels for a quick scalp, guys. If you were to mark this on your own chart, you can do that. So when a price reaches 1917, you could put a decent SL. So let's say a price at 1917. which is this level here. You don't have to even put a big SL. You can just put about 2 points, which is about 20 pip SL, and buy it. It will be a decent SL risk to reward. You can put your TP somewhere around 1926, so it's about you're risking basically $2 to make $7, which is not bad. If a price reaches at, let's say, 1910, you could put your SL, let's say 1907, so you're gonna risk, let's say, £3, $3 to make, and you put your TP just below around 1917, so risking $3 to make $7, so which is not bad. So these are the key levels, guys. I'm expecting gold to really move about for next coming week. I do not expect gold to really rise 1980, unless something massive happens from from US, and they talk about Trump definitely winning Trump definitely losing the election, or the election is not going to happen this year, blah blah blah, something like that happened, or vaccine they were creating is not working out. If something like that major happens, then yes, gold will shoot upwards, because that's the safe haven, as we have said again and again. Gold is the safe haven currency of the world. When something bad happens in the world, people rush towards gold, because I've explained you at the start of the video. Why is that? Because gold always rises. Gold always holds its value. Gold will always rise. It will drop, but it will rise back to highs. It did drop from 26 September 2012. It was 1761. It did drop as low as 1050, but then again it rose back to highs of 2000. So gold will always rise. That's why gold is safe haven currency. So anything bad happens in the world, you are gonna see people buying gold against dollar, buying gold against euro, buying gold against AUD, which is Australian dollar. So hopefully you enjoyed this live video about gold. And again, if you have any question about this pair especially, you can ask me right now. If you have any question, what indicators you want to use on this pair, or how to enter the trade, what loss size you should be using when trading gold, because gold is not at the forex space, because a point movement, let's say gold moves from 1925 to 1927, is a 20 pip movement. You see there's hardly any gap, but this is a 20 pip movement. You can't put your normal loss sizes for gold, because a 20 pip movement in forex would be let's say GPUSD would be somewhere from here to there. So somewhere from here to there would be 20 pip movement GPUSD, but in gold it's just here to there, which is barely anything. So that's why when trading gold, you got to be a bit more careful. You have to use more risk management techniques than compared to forex, because you can lose much more. You can make a lot more on gold, but you can lose much more as well. So hopefully you guys enjoyed this, and thank you so much for joining. And again, this is an exclusive Zoom call for gold. This will be happening every day. If you do join the gold group that we talked about earlier in the morning, if you're interested and you need more info, please reply yes to my team, and we'll be more than happy to guide you how you can proceed to be joining the gold group, where you'll be receiving exclusive gold analysis every morning, and exclusive gold Zoom calls every evening, guys. Thank you so much.